Hi, everyone. I'm Martha Stokes. I'm going to talk about Microsoft today, which reports after the market closes. That's not necessarily a bad thing or a good thing. That's just when they've chosen to report. Sometimes people think that it always means a bad indication, but not necessarily so. We are looking at it, and what I want you to understand is that you need to develop spatial pattern recognition skills. I have a lot of people in a lot of different industries that are working with AI, trying to teach it to do what a human can do, and it cannot. There's a long ways to go. Also, we do not have an AI bubble. There isn't going to be a market crash because of AI bubble. It's not at all like it was in 2000. What we have is a period of rebuilding infrastructure, new infrastructure to assist and help in the development of AI. And AI will go through several development phases. It may go through 6 or 10 development phases over the lifetime of this new technology. And each time that will cause a growth spurt for the stocks that are the leaders. There will always be 3 major leaders in the AI technology, but there will be more than that because the leaders will depend upon where they are and what AI they offer and to whom they offer that AI technology to. So it's going to be a huge transition and a huge growth. Right now, the indexes are sideways. That's perfect. That's what's to be expected. We have a stressed market condition for a variety of reasons. Also, the Dow and the Nasdaq have been moving up for a long time. Now they're shifting sideways. A lot of their components have new technologies. A lot of that new technology requires more infrastructure, more research and development, and so on to push it into the next phase. It's not an enhancement phase, it's another level of development phase. And this will go on for the life of the great bull market. We have Microsoft, and we had a sideways trend right in here, and then it moved down. This sideways trend was due to the fundamentals of the company in the prior couple of quarters. Then it dropped because Microsoft announced that they were going to be building some infrastructure. They were going to be growing. So the fundamentals dropped a little bit. The dark pools were still in this, and they're still in it today. There's a steady accumulation going on. But what happened is small funds managers started hearing about the AI bubble and they started selling, selling, selling. Small funds managers are anyone who has less than 5 billion in assets under management. I know 5 billion sounds like a lot of money, but that's a drop in the bucket. 350 to 400 billion dollars changes hands in the US stock markets every day. And we have a lot of foreign funds and sovereign funds and so on and so forth. You need to be able to read the chart like you would read a book, and you need to understand the dynamics of why it dropped. It dropped because it was going to invest heavily in infrastructure, which would potentially lower earnings or cause a decrease in revenues if there's an attention moving away from what they're doing. They're going to report today, and they've had this beautiful pre-earnings run. You do pre-earnings runs, and it came up because it fell well below the support level that we have. This is a long-term support level. If we go to the weekly chart, we can see that there's a high from the July 24, and it has moved up since then. It had a strong run up for that period of time as well. So there's nothing seriously wrong with this. Can you swing trade it is what you want to know. Well, you can swing trade the pre-earnings runs, and now it's paused and professionals are taking their profits because we don't know that HFT AI, which the HFTs use often, is going to work or not. HFTs make or take a liquidity, and they are necessary for the stock exchanges because the stock exchanges do not have enough liquidity because the dark pools are off exchanges and into ATS venues where there is no uh, public trading going at all, no small funds trading, so on and so forth. So with the 80% of all the market activity off of the exchanges have been struggling to make enough revenues, and so they use the HFTs, and the HFTs use AI because they were using algorithms before, and they just added the AI on top of their algorithms. However, they make mistakes. If there's some sort of bad news in the retail stock market, then the ad picks that up and will attempt to sell the stock down. Or if there's good news, then it will attempt to sell it up. They do that by filling the queues with hundreds and hundreds of thousands of very small lot orders. The professional side trades on the millisecond. That's 60,000 times a second, 320,000 times per minute. You trade on the minute scale. I don't care if you're looking at a tick or whatever. You do not have access to all the milliseconds. And even if you did, you don't have a computer that could run it. It costs millions and millions of dollars. Professionals have tons of money into their computers and their routing systems and so on and so forth. You do not. So you need to piggyback off of the pro traders and ride the waves up that they have. This is a fundamental level. So even if the HFTs gap it down, and they may, then it will return and recover fairly rapidly and move on up, because this quarter is ending and the next quarter is already starting underway for a whole month. So there's a pretty good idea of how the guidance that the CEOs will give. And yes, these CEOs have to be honest, they can't lie. You need to learn pattern recognition skills. You have tools, and some of your tools are great. You also need to get away from price and time indicators because they lag. Lagging means the price has to move before it signals an entry. You need to use candlesticks instead of crossovers from price and time. You need to add volume indicators, volume oscillators, and so on. So the reason that this step down was an obvious one. The CEO said, we're going to be building infrastructure. We're going to be investing heavily into our company at this time for this next quarter. This quarter, what he says, it could be good and the stock could just gap and keep on going. But when you do an earnings run, you don't hold. You have to exit before the announcement, because the HFT AIs make a lot of mistakes. AI is a very primitive, new, very young technology and has a long ways to go. And it is not as intelligent as humans. And the professional side does not use AI at all for making critical decisions. So we have Microsoft. We know where the fundamental zone is. And we know that it's going to report this afternoon after the market closes. It could gap either way. It probably will have a gap because it's a big name company, but it is a stock to watch. And you can see that it has potential to move back up to where it was before after this infrastructure is done. It's a pricey stock. It's a stock that needs to split very badly, but it hasn't yet, and it needs to. When it splits is a better idea for entering if you're interested in long term, because you have a lower price point, and after the split, stocks tend to move up. This is a range, and what we have here is a lot of millisecond trading going on that you can't see. When you learn pattern recognition skills, like what is this? What kind of a run is this? Who's moving this run? Well, it happens to be buybacks. Who was forming this pattern? Well, these are nudges. So pro traders were in nudging this. Smaller funds responded by selling down, and then more nudges. So pro traders are showing an indication that they have information that you do not have, that implies that as long as HFT AI doesn't interfere, Microsoft is going to have an acceptable or good earnings release. When you study the charts in terms of candlesticks and not rely so heavily on indicators that cross over, you will have far greater success. You also have to understand that there is no way that you can drive the market. You do not have the ability to push enough volume through. Now, what we compare with volume and is the fact that it's not the quantity of shares, it is the quantity of the lots. So a lot of times people are confused about that. So we have a lot of activity, but we had low activity today on Microsoft. You see it's below the average that we have on this volume bars, but there is still accumulation going on and activities, because this is the fundamental level. If it gaps above it, then that indicates that the earnings may continue to move up you have this resistance to get through. But as all these companies return and get stronger and stronger and start building the second phase of AI, all of these technology stocks will have growth. I'm Martha Stokes, and that's the tutorial for today.